Hi there, welcome to Kneppy Invest. One of the most important or even best qualities we can have as investors or even just as beings is to be open-minded, is to question any biases we might have. And I have plenty of biases, and one of my biases I did have in the past few years is the belief that Nvidia was sensationally overvalued. In fact, I could not understand how people were buying this company at the valuations I was seeing. Now, to be honest with you, I didn't do much research into the valuation of this company. And because I am open-minded, I thought, hey, let's just stop my thinking that this company is overvalued. Is this company overvalued by looking at the numbers? So I delved a little bit deeply into the numbers. And what happened after I did that little bit of research on this company, looking at the numbers, is I actually took a position in Nvidia just before they released their fourth quarter results. Now, share price was on a run or had been on a run before they released their results until the final 2 days. So the 2 days leading up to the release of this company's results, the share price pulled back. A little bit of profit taking, a little bit of wariness there among the market. However, Nvidia proved that this company, in my opinion, this is my opinion, this company is not overvalued. There is a reason why this company is heading towards becoming the most valuable company on planet Earth. Now, since I am a new shareholder of this company and I knew the company was releasing their results after trading had finished for the day in America, so we're talking about maybe 6 a.m. or so Australian time, the first thing I did when I came home from a night shift is I just Googled Nvidia fourth quarter results. Now, before I did this is an article that was released on Financial Review, just talking about the nervousness in the market around Nvidia's results. And I have no doubt right now that the Nasdaq is going to go significantly higher on the February 22nd trading session simply because of what happened with Nvidia. So Nvidia share price had dropped about 8% over the previous two trading days from or amid nervousness about whether the company could meet expectations that have driven the stock price nearly 40% higher so far this year. We're not 2 months into the year, yet the valuation of this company is 40% higher. So after I did get home from my night shift, the first thing I did is I just Googled Nvidia's fourth quarter results. And here, in the next slide, are some of the results I saw from that Google search. And to be honest with you, as soon as I saw these headlines, I went for my run. Always go for a run after my second night shift, my favorite run of the week. And I knew straight away that the share price of Nvidia was going to be significantly higher when it opened trading on February the 22nd. So from Forex Live, risk sentiment very much buoyed after Nvidia earnings. When one company is carrying the weight of the world on its back, being a little bit hyperbolic there, Forex Live. From the AFR, Nvidia soars after insane fourth quarter earnings. Artificial intelligence bulls cheer. I wouldn't call myself an artificial intelligence bull, but I'm definitely an Nvidia bull because I do think there is an argument to say or suggest that this company is not overvalued, which is against a lot of value investors thinking. Many value investors thinking this is one of the most overvalued companies in history. Shares in the AI chip maker have soared 10% in after-hours trading after the company smashed earning expectations. And here's one from Yahoo Finance. Nvidia shatters records with fourth quarter and fiscal 2024 earnings. So I was comforted by just reading these particular headings. And of course, Australian Financial Review did release a few articles on Nvidia, and rightly so. These results were absolutely stunning, staggering. And I can understand why the business community, the whole world should be absolutely amazed by what Nvidia have done in the past quarter, what Nvidia are doing, and the potential of this company moving forward, which I'll talk about later in this particular video. So Nvidia and the trouble with bubbles. Now, I do have a question whether we could say that Nvidia is in a bubble right now because they are showing and proving that the valuation of this company, which was high, is high for a reason because of the staggering growth this company is experiencing right now. So Nvidia's staggering growth and surging share price is drawing comparisons to previous bubbles. And those people who are comparing Nvidia to those previous bubbles, I think, are a little bit ignorant about what's happening with Nvidia right now. How should investors approach this mania? I'm not even sure it's really a mania because Nvidia are backing up these valuations. Now, we get into a few quotes here, which is, again, maybe Goldman Sachs and Ives of Wedbush are being a little bit overdramatic. So Goldman Sachs called it the most important stock on planet Earth. I don't know about that. Maybe they're right. Veteran tech analyst Dan Ives of US research firm Wedbush called it probably the most important earnings that we've seen from any company in the market for the last 5 years, maybe even longer than that. I've seen some other analysis or researchers being absolutely glowing about these results. And the last sentence in this particular article, thank goodness that it delivered, and how. I think it was the last sentence. And if it wasn't, it should have been. Now let's have a look at the results. And we're going to look at the fourth quarter results in this slide and then the full year results in the next slide. So this was the fourth quarter. And we now know the full year results. I've also included a little snippet from an email I receive every so often from Stock Market Nerd, which I actually do like. Do like to read that because they go into analysis around some companies that are listed on the NASDAQ or the New York Stock Exchange. And because I am started or did start my journey investing in America about 2 years ago, I just really like reading about companies listed over there. And as we go, the other thing I should mention here, the company released GAAP earnings and non-GAAP earnings. I'm just focusing on GAAP earnings. I'm pretty sure that Stock Market Nerd looked at non-GAAP earnings. To be honest with you, I don't know the difference between the two because I am not an accountant. So what they've done here, Nvidia have done here, is separated the fourth quarter results and compared it to the previous quarter, the third quarter financial year 24, and also compared it to the previous corresponding period. And when we look and compare the results of this quarter to the previous corresponding period, you can understand or get any sort of understanding why these results are absolutely stunning, just looking at the fourth quarter results. So revenue grew 265% from the previous corresponding period. Gross margins up 12.7 points or percentage points from 63.3% to 76%. So revenue from $6 billion to $22 billion. And net income up 769% from 1.4 billion to 12.3 billion. And earnings per share increasing from 57 cents to $4.93. Now, one of the problems, and this is the reason why a lot of value investors are saying this is the most overvalued company in history, is because they were looking at financial year 23 results. And I'll touch upon this during the rest of the video. Now, what Stock Market Nerd here said is in relation to whether these results beat market expectations. And they did. That's another reason why the share price is going to be significantly higher. In fact, EBIT beat estimates by 10.2% and beat EBIT guidance by 26.1%. And earnings per share beat guidance by 11.2%. And the company generated $5.16 in earnings per share versus 88 cents year on year. Wow, just wow. So again, I think he's using non-GAAP earnings. Now let's have a look at the financial year 24 results, comparing them to financial year 23. And again, one of the reasons why a lot of people thought this company was significantly overvalued is they were using financial year 23 results. They were using earnings per share and income, that sort of thing, to say this company has ridiculous PE ratio. And actually, in fact, I'll show you an article I saw in March from Seeking Alpha to really showcase why there were so many people thinking this company was in a bubble and significantly overvalued. And when I stepped back and took a look at the numbers, I said, no, you're looking at the wrong numbers here. Don't focus on financial year 23 numbers. If you do just focus on financial year 23 numbers, you're going to go down a path that will lead you to the belief that the company is significantly overvalued. And you could just see by comparing financial year 23 numbers to financial year 24 numbers, why that would be a mistake. And I really amplify, is that a good word to use here? Really amplify these thoughts when we look at the Seeking Alpha article. So revenue from 26.974 billion to 60.9 billion. Gross margins again up 15.8 points or percentage points. Income from 4.4 million or billion, because these are in million, so that's billion, to 29.76 billion, up 581%, and diluted earnings per share up 586%. So a significant increase in income and earnings per share for the company. And that's why, and yeah, that's why the market is absolutely astounded by these results. One of the most important things a company can do, perhaps the most important thing a company can do when they release any sort of results, is to have an outlook. Because if they give out any sort of bearish outlook, the market is going to absolutely punish that company. So Nvidia did release their outlook for the first quarter of financial year 25. I just realized there that they just finished financial year 24. Now it's financial year 25. So revenue is expected to be 24 billion plus or minus 2%. So that is an increase from the really good quarter they just had. GAAP and non-GAAP gross margin is expected to be between 76.3% and 77%. Is that an increase on the previous quarter? Let's have a look. Gross margin 76%, so that's increasing. So everything is on the up when it comes to Nvidia. So even the next quarter, the quarter we're in, is going to beat the most recent quarter based off the company's expectations and guidance. And just remember, we look at the previous slide here. Where was it? They beat EBIT guidance by 26.1%. So the market is now thinking that if they beat guidance in the most recent quarter, there's a possibility the company will beat guidance again. So don't be surprised to see the share price go on a significant run moving forward over the next few months. There was some other interesting commentary I saw online. Now, I haven't gone through the results in depth, haven't gone to or listened to the call in regard the conference call, whatever you call it, in regards to the results. But I did see this quote a bit out there. This is from Motley Fool, the American version, not the Australian version. During the quarter, Nvidia reported explosive sales and earnings growth after AI hit a tipping point. Nvidia's founder and CEO Jensen Huang. So Nvidia has been around for 30 years now, 1993. So yeah, just over 30 years. And this is what the CEO said. Accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations. Our data center platform, and I really implore you, have a look at the results, particularly the data center results, absolutely stunning. So that was a stunning result, the data center division, whatever you call it. So the data center platform is powered by increasingly diverse drivers, demand for data processing, training, inference from large cloud service providers and GPU specialized ones, as well as from enterprise software and consumer internet companies. Vertical industries led by auto, financial services, and healthcare are now at a multi-billion-dollar level. And I think this growth could continue even further as we continue in this AI boom over the next 5, 10, possibly even 20 years. Now we get to this article I read on Seeking Alpha a few months ago. In fact, this was an article that prompted me to take a closer look at Nvidia just to see if or ask the question whether this company was severely overvalued. So this is from Stuart Alsop. Sorry, Stuart, for using your article here. So Nvidia's stock price is detached from reality. And that was the thinking among a lot of investors out there, particularly value investors, I found. In fact, I was listening to a podcast this morning before I saw the results, and this podcast was I've got to find it now. Adam Taggart, Soft versus Hard Landing, Where is the US Economy Heading in 2024? Invest in the Next Big Idea podcast. And even he mentioned in this podcast how significantly overvalued Nvidia was, how it's in a bubble, that sort of thing. So Nvidia is trading at valuations on par with some of the biggest bubbles in US history, with a price-sales ratio of 25 times and price-free cash flow ratio of 175 times. So again, price to free cash flow ratio of 175 times. Where did he get that ratio? from last year's results. And I'm going to show you in the next slide why that was a significant mistake. Such extreme valuation ratios are rare for large established companies, as growth is a declining function of market size. And even that is not true for Nvidia. In fact, their compound annual growth rate is increasing. In fact, I saw this in an article where it just showed you the previous 3 year compound annual growth rate over the last 3 years, and it's climbing. So the compound annual growth rate in revenue over the last 3 years is greater than it was last year. So suggesting equity losses are likely even if earnings grow rapidly. Reasonable assumptions put the fair value of Nvidia at 64 billion, 90% below current levels. So the share price when he released this article must have been around about $700 billion or so. Now it's about 1.8 billion. So he must have been having a heart attack, not literally, when he saw share price of Nvidia keep on rising. So I'm going to show you and explain the mistakes Stuart Alsop made when he wrote this article. So continuing on to this article, and he goes through some sort of analysis, a valuation analysis. And I'm just going to show you one part of this analysis, looking at the free cash flow in 2033. So he's looking 10 years in advance based off 2023 numbers. So he's actually saying here, based off the expected growth, his expected growth for Nvidia, the free cash flow for Nvidia in 2023 will be 23.3 billion. So keep that in your back of your mind, not the back of your mind. Just remember that number, 23.3 billion. I don't know why I'm writing it down because I can just see it here. Now, I've also included here the cash flow statement for Nvidia, and that also includes 2023 numbers and 2024 numbers. So the most important things here when we're talking about free cash flow is operating cash flow and also what they call purchases related to property, equipment, and tangible assets. So to get free cash flow, you take the operating cash flow and minus that particular item, purchases related to property, equipment, and tangible assets. So last year, Nvidia had cash flow from operations of 5.6 billion and capital expenditure of 1.8 billion, which means their free cash flow was 3.8 billion. That's how he drew this long bow that Nvidia is severely overvalued based off the financial year 23 numbers and the very fact that this company had only a free cash flow of 3.8 billion. Now let's have a look at the free cash flow for financial year 24. And remember, these were stunning numbers. So operating cash flow for this company in financial year 24, 28.1 billion. So this company would have to spend about almost $4.7 billion in capital expenditure not to beat the expected free cash flow of $23.3 billion that Mr. Alsop expected for this company in 10 years' time. But they didn't spend that much money. In fact, they only spent, $1.1 billion, which means this company had free cash flow of about $27 billion in financial year 24. And remember, Stuart Alsop predicted this company would, based off his valuation and expected growth of free cash flow over the next 10 years, he expected this company to have free cash flow of $23.3 billion in 2033. He's 9 years too late. And again, before I look at the chart and talk about the chart here, I think this was the main problem and why a lot of people were thinking that Nvidia was significantly overvalued. They were basing their analysis on financial year 23 numbers like Stuart Alsop, and that would lead you down the wrong path. So what I did when I did my analysis on Nvidia is I looked at the last 3 quarters. I did not look at financial year 23. And the last 3 quarters alone, not even taking into account the fourth quarter results, just the last 3 quarters would show you, if you took the time to make that analysis, that Nvidia's valuation is justifiable based off the numbers you were seeing. And that's what some parts of the market saw as well. And that's why the share price of this company moved into a well-defined uptrend in January of 2023. Share price right then was under $200. Now the share price is roughly about $700 or just under $700. So the share price of this company has tripled or more than tripled in the past year or so. And you can see the share price struggling in the last few trading days. And that's that nervousness because the share price had been on a beautiful run since January, up from $480 to high of $740. So that's an increase of 50%, not 40%. Now, the share price will open significantly higher when trading begins on the NASDAQ. My predictions is at least 10% higher. I wouldn't be surprised if it's more than 10% higher because these are stunning results. And Nvidia significantly beat market expectations, and they significantly beat their own expectations as well. So don't be surprised to see Nvidia's share price go on a significant run from here. And that is all I have for this video, looking at Nvidia's insane, stunning, amazing, sensational fourth quarter results. And I'm a little bit biased now because I'm a shareholder of this company. And this was probably, I would say this is probably, or was probably the results that made me the most nervous, simply because I bought just before the results were released. And I saw the share price drop over the last few trading days. I was thinking, oh, gee, what does the market know that I don't know? And then, lo and behold, all my concerns were allayed when I saw those headlines. And then I took a quick look at the results, and yeah, absolutely stunning results from Nvidia. So if you have any questions about this company, about the results, if you still think this company is severely overvalued, I'd love to hear your thoughts, because right now the PE ratio of this company is only about 60, between 55 and 60. So I don't think it's very overvalued, particularly when you compare the PE ratio to the growth of the company. So if you do have any thoughts, any questions, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.